2006. An economist goes on CNBC and says the housing market will collapse. The stock market will crash. America will face the worst recession since the Great Depression. Everyone laughed at him. They called him crazy. Dr. Doom, Perma-Bear, Peter Schiff. 2 years later, he was right. The housing bubble burst. Bear Stearns collapsed. Lehman Brothers bankrupt. The financial system imploded. Peter called it all. But Peter didn't just predict the crash. He positioned his clients to profit. While the S&P crashed 57%, Peter's clients, they made money. Gold, foreign stocks, currencies, diversification away from the dollar. Peter's philosophy? Austrian economics, sound money, gold standard, free markets, no government intervention. He believes the dollar is doomed. Inflation is inevitable. The Fed is destroying wealth. But here's what makes Peter controversial. He's been calling for dollar collapse for 20 years. He predicted hyperinflation that never came. He's been wrong on stocks. They went up for a decade. Critics call him a broken clock. But then 2021 happened. Inflation surged. The Fed printed trillions. The dollar weakened. Suddenly, Peter doesn't look so crazy anymore. Maybe he was just early. Love him or hate him, Peter Schiff forced the world to question everything. Keynesian economics, fiat currency, the Federal Reserve, central banking. He's the loudest voice for Austrian economics in modern finance. Today, I'm breaking down Peter Schiff's 20 rules, from Austrian economist to gold bug, from 2008 crash prophet to controversial contrarian. These aren't just quotes. They're the blueprint for Austrian investing. Let's dive in. Quote 1. Buy gold. The dollar is doomed. Peter's first principle? Gold. He's been recommending gold for 25 years. Why? Because the dollar is fiat currency, backed by nothing. The Fed prints trillions. That's inflation. That's currency debasement. Since 2000, gold is up 700%. The dollar's purchasing power? Down 50%. Peter said, gold is real money. The dollar is an IOU from a bankrupt government. Peter allocates 30 to 50% of portfolios to gold, mining stocks, physical bullion, ETFs. He says, if you don't own gold, you're betting on the dollar. That's a losing bet. Quote 2. The Federal Reserve is the greatest threat to prosperity. Peter hates the Fed. Why? Because they manipulate interest rates. They print money out of thin air. They create boom-bust cycles. Austrian economics teaches, let the free market set rates. No central planning. The Fed's low rates created the 2008 housing bubble. Their money printing caused 2021-2022 inflation. Peter said, the Fed doesn't prevent crises, they create them. Then they make it worse with bailouts. Peter's solution? Abolish the Fed. Return to the gold standard. Let interest rates be set by supply and demand. That's Austrian economics. Quote 3. Don't put all your eggs in the dollar basket. Peter doesn't trust the dollar, so he diversifies globally. Foreign stocks, Swiss francs, Singapore dollars, Norwegian kroner, commodities. He says, the dollar is one currency. Why bet your entire wealth on it? Peter's typical portfolio? 40% gold, 40% foreign stocks and currencies, 20% US stocks. mostly exporters that benefit from a weak dollar. Peter warns, if the dollar collapses, a diversified portfolio survives. An all-dollar portfolio? Wiped out. Quote 4. Anyone who understood Austrian economics saw 2008 coming. 2006. Peter went on CNBC. He said, "The housing market is a bubble. It will crash. Banks are over-leveraged. We're heading for a major recession." The hosts laughed. The guests mocked him. 2 years later, Bear Stearns collapsed. Lehman Brothers bankrupt. The S&P crashed 57%. Peter was right. How? Austrian economics. He saw the malinvestment caused by artificially low rates. Peter said, "The crash was inevitable. The Fed created it. I just explained why." That's the power of Austrian economics. Quotes 5 and 6. Inflation is theft by the government, and every fiat currency in history has failed. Peter calls inflation a hidden tax. When the Fed prints money, your savings lose value. That's wealth confiscation. Peter said, inflation doesn't just happen. The government creates it by printing money. And fiat currency? Peter points to history. Roman denarius, French assignat, Weimar Germany, Zimbabwe, Venezuela. Every fiat currency eventually collapses. Why? Because governments can't resist printing. Gold has been money for 5,000 years. Fiat currencies? Average lifespan? 27 years. The dollar has been pure fiat since 1971. That's 53 years. Peter says the clock is ticking. Peter's warning, the dollar will collapse. It's not if, it's when. Protect yourself with gold and foreign assets. Inflation is theft. Fiat is temporary. Gold is eternal. That's Peter's mantra. Quotes 7 and 8. U.S. stocks are in a bubble, and focus on dividend-paying value stocks. Peter's been bearish on U.S. stocks for years. Why? Overvaluation. The S&P trades at 30 times earnings. Historical average, 15 to 16. Peter says stocks are priced for perfection. Any shock will crash them. But Peter doesn't avoid stocks completely. He likes foreign dividend payers, utilities, energy, telecoms, real businesses with cash flow, not speculative tech stocks priced on hype. Peter said, "I don't own stocks for capital gains. I own them for dividends and as inflation hedges." That's value investing with an Austrian twist. And the tech bubble? Peter's been warning for years. He calls it the everything bubble. When it pops, gold will shine. Peter's trade: short overvalued stocks, long gold, long foreign dividends. That's contrarian positioning. Quote 9. Bitcoin is fool's gold. Peter hates crypto. He calls it a speculative bubble with no intrinsic value. Only real gold is money. Quote 10. Government debt is economic suicide. America owes $34 trillion. Peter says it's unpayable. Default or inflation? Those are the only options. Quote 11. America consumes too much and saves too little. Austrian economics teaches savings fund investment. Investment drives growth. Consumption depletes wealth. Quote 12. Keynesian stimulus doesn't work. Peter rejects government spending. He says it misallocates resources. Let the market heal naturally. Quote 13. Housing is in another bubble. Peter warns, low rates inflated home prices. When rates rise, prices will crash again. Quote 14. Taxation is government coercion. Peter's a libertarian. He believes in minimal government, maximum freedom, low taxes, free markets. Quote 15. China is outproducing America. Peter says China saves and invests. America borrows and consumes. That's why China will win. Quote 16. Governments must live within their means. Peter advocates austerity. Cut spending, balance budgets, no bailouts. Let bad businesses fail. Quote 17. America stopped producing, started consuming. Peter blames trade deficits on bad policy. Bring manufacturing back. Quote 18. Without sound money, civilization collapses. Peter wants the gold standard restored. No more Fiat. No more Fed. Quote 19. Get government out of the economy. Peter trusts free markets. They allocate resources efficiently. Government intervention creates distortions. Quote 20. When everyone agrees, everyone is wrong. Peter's always contrarian. The crowd buys stocks, he buys gold. The crowd loves the Fed, he fights it. That's Austrian contrarianism. So what's Peter Schiff's legacy? Peter called the 2008 crash when everyone said he was crazy. He positioned clients in gold and foreign assets. They survived, while others were wiped out. But Peter's been wrong, too. He's been calling for dollar collapse for 20 years. Stocks went up for a decade. His gold-heavy portfolios underperformed in the 2010s. Critics call him a broken clock. But Peter responds, I'm not wrong, I'm just early. The dollar will collapse. Inflation will surge. It's Austrian economics. It's inevitable. Love him or hate him, Peter forced the world to question the Fed, question fiat currency, question Keynesian economics. That's his legacy. Want to learn more? Listen to the Peter Schiff podcast. Daily Austrian economics, gold analysis, Fed criticism. It's all there. Study Austrian economics, Ludwig von Mises, Friedrich Hayek, Murray Rothbard. That's the intellectual foundation for Peter's worldview. And if you want more Austrian economist breakdowns, Ron Paul, Jim Rogers, Mark Faber, subscribe and hit the bell. Drop a comment. Do you agree with Peter on gold? Thanks for watching.